The U.S. stock market is heading into a crucial week, with several key factors likely to determine its short-term direction. Investors are closely watching corporate earnings, Federal Reserve expectations, economic data, oil prices, and geopolitical developments. The biggest market catalyst will be earnings season. Major companies including Alphabet, Tesla, Intel, IBM, General Motors, American Express, and Verizon are scheduled to report their results. Strong earnings could provide further upside for the S&P 500 and Nasdaq, while disappointing numbers may trigger a broader market pullback. Technology stocks remain the primary driver of market performance. Federal Reserve policy will also remain in focus. Recent inflation data has increased expectations that the Fed may keep interest rates unchanged in the near term. Lower rate expectations are generally supportive for growth and technology stocks. However, any hawkish comments from Fed officials could quickly increase market volatility. Economic data will play an important role as well. Investors will be watching jobless claims, PMI figures, and housing market data. Strong economic numbers would confirm the resilience of the U.S. economy, but could reduce expectations for future rate cuts. Weaker data, on the other hand, could strengthen the case for monetary easing and support equity markets. Geopolitical risks remain another major concern. Rising tensions in the Middle East have already put upward pressure on oil prices. If oil continues to move higher, inflation concerns may return, potentially weighing on equities and increasing demand for defensive sectors. Sector performance is likely to remain uneven. Artificial intelligence, cloud computing, data center infrastructure, and semiconductor-related businesses continue to attract institutional capital. Energy and defense stocks could also outperform if geopolitical tensions persist. Market money flows suggest that investors are still favoring long-term growth themes, particularly AI-related companies. Despite short-term volatility, institutional investors have not significantly reduced their exposure to technology. For next week, there are two likely scenarios. In a bullish scenario, strong corporate earnings, stable oil prices, and supportive Fed expectations could push the S&P 500 and Nasdaq higher by 1% to 3%. In a bearish scenario, disappointing earnings, rising geopolitical tensions, and higher oil prices could trigger a market correction, particularly in technology stocks, with losses of 3% to 5% possible. Overall, the medium-term outlook for U.S. equities remains constructive. However, investors should expect increased volatility in the coming week. Technology and AI will likely continue to drive market sentiment, while earnings reports and macroeconomic developments will determine whether the current rally can extend further.